Yeah, I mean, that's what people are doing, and
Yeah.
that's what people are thinking. But this
Yeah.
is like not okay. Well, that mentality is not good. But hold on, layer on top of things that like the banks don't even have to worry now about what they're doing with money
It
because they're
feels like
getting,
that.
well, but
It feels
this
like
is
they're
what just
getting the
happened.
carte blanche right now to be able to just sort of, let's just make it work. What do we need to do to make it work?
This is dangerous times. This
Yeah.
is dangerous times. This is very dangerous times when all of a sudden, like, it's like money alchemy all over the place. It's like, oh, okay, the entire system is collapsing. No
Mhm.
problem. We
We
got
don't
this.
we don't
Don't
need to
worry
have
about
as
it.
much money as we say we do, right?
No, this is just insanity what's going
Yeah.
on. This is insanity what's going on. And I can't even, you're saying that buyers aren't crazy right now. And all I'm thinking is that anybody buying anything right now is crazy because you can't possibly think for a millisecond that what's going on in the States banking system and Europe's banking system and God knows where else
Mhm.
can't have any effect at all on like Toronto real estate or Canadian real estate. Like, are we that um impenetrable a market? Like, is it that safe and secure here?
I think that the 2008 market right now has got a lot of similarities to what we're dealing with, right? So you got like liquidity issues and stuff like that with the banks. The REITs are all suffering, defaults and stuff like that. Blackstone, different types of big corporations aren't able to make their payments, like we talked about Brookfield and stuff like that before. And so this can create, right, a liquidity issue, and as time goes on, you're going to start to
Ken.
see less and less money. You're going to start to see less and less money available for people, right? But the banking system here in Canada on the small residential mortgages is so regulated compared to other parts of the world. So there's definitely not a lot of programs that would be lifted as far as the Canadian consumer would be able to have access to, right? It's just alternative markets, it's investment portfolios, it's construction loans, all those type of things will get affected drastically, right? Because of those issues. But at the end of the day, the government's creating mortgages. We've created mortgages in order for people to, want to buy houses so that the government can make money and the banks can make money. I mean, that's just what the service is there
Well,
for.
that's the whole
So they're
thing.
gonna they're gonna run this house mill as much as possible. They're gonna keep those wheels turning and make sure that people can borrow money on these like a lender type of mortgages.
Well,
But the
priority number one is, I
subprime
think,
stuff is the stuff that gets wiped out.
but keep paying is priority, not even the new stuff. It's like, let's
Mhm.
just make sure that everybody out there doesn't all just start defaulting all
But they
simultaneously, you
they
know?
put these reserves out. Like it's almost like I remember I was reading a lot about this during the pandemic because they were obviously being right. OSFI was like creating this um, schedule for them to be able to continuously assume that there is more and more defaults coming, which never came, right?
Right.
So okay, that all that money now gets put back on the balance sheet. So now again they're ramping it up. They're like, oh, we're gonna make sure that we got like how much impact does it really have? If they've got the ability to set aside that much money, billions and billions of dollars, to be able to have the reserves for any impact from defaults, how much does this really affect the banks at the end of the day? Right? They're going to keep lending. They're going to say, "Yeah, Joe's not paying his payments anymore, but we thought that would happen."
We
All
kind of
right,
knew that.
keep going. Sam needs a mortgage. Sam needs a mortgage. We better
No,
get
but
him.
it's okay because you know what? We got this new kind of loan that
Mhm.
we can offer you that the payments are going to be similar.
Yeah,
Um,
we're gonna call it the flex plan, and you
don't
know,
look at the line here that shows that you've paid three times the amount of your house over
just
time now.
just based on your age, right? You're 25 there,
Can still
Michelle.
afford it, right?
I
Forever.
think 60 years. You think maybe 60 years is a good time? 85, you'd be finished paying off this mortgage, right?
Because
Is that good?
if it doesn't
We
work
can
for you, we
refinance
have
anytime.
75-year AMs
Yeah,
now,
we can
right?
we can refinance anytime.
We'll
That's
figure it
that's
out.
right.
Is this the
So
way?
this is what's gonna happen.
This is what's going to happen. We're just
They'll
going to
find
keep
some way.
figuring it out.
They'll find some way for people to always keep on borrowing. That's just the way it goes, right?